Today I'll be presenting strategic speculations for the next 12 months. Start off with the presentation agenda. I'm going to give you a few words on precious metals, kind of what I think of it. What's next, so what metals I think there's opportunity in. I want to revisit the 4 speculative ideas I gave you back in March during the MIF presentation. And I want to give you 2 more speculative ideas for the rest of, or the next 12 months. And then finally, some words on my YouTube video series, Field Notes, and my newsletter, Junior Stock Group Premium. So precious metals, I think this is the place to be for the rest of the year and in looking into 2025. I don't think I can add anything to what you've already learned from day one and anybody else that's spoken, Peter, this morning. I think this is the biggest opportunity and where the focus should be. The Fed pivoting with interest rate policy in a big way on Wednesday, while it was kind of a tepid reaction in the market on Wednesday afternoon and Thursday, I think you saw some bigger volumes on Friday, and certain names have started to move. And again, this is where I think the opportunity is. So what's next? So while I think you should be in precious metals right now, usually the investor that wants to be successful from years ahead is looking what the contrarian move is right now. And so I've got 2 ideas for you that I think are 2 blown out markets that are probably ripe for opportunity if you have patience to wait. So the first is the platinum group metals. The PGMs are absolutely blown out. I would say it goes back to Biden's election and really the advent of the Green Revolution. I think he spurred it across the world. And in the process, because the PGMs are linked to the catalytic converters in internal combustion engine vehicles, has seen their demand and their appeal to investors go down. The adoption of EVs, I think this is something to stay, but on the bearish and the bullish case, I don't think it's going to be necessarily the adoption rate that a lot of people have predicted, and cost being the big one in these high inflationary environments. And I think that's what we're headed for with these lower interest rates, is just making the problem worse. I think you're going to see the cost of living continue to grow, and internal combustion engines, especially in emerging markets, are going to be here for a long time. Another bullish point to consider with the PGMs is where the supply comes from. The primary supply comes from Russia and South Africa. For anybody who's been paying attention to world politics over the last 3 or 4 years, you'll know that Russia especially has been on the bad side of the news flow. And I wouldn't be surprised if the supply in some way could be interrupted in the future, which would be bullish for PGM prices. Lastly, and maybe most importantly on the equity side, because I think that's what most people would be interested in, is the PGM equities are absolutely forgotten. They're dirt cheap. In a lot of cases, you have companies with resources or even technical studies, and these things are selling for pennies on the dollar, single-digit market caps. Mind you that they do need a doubling of the PGM price for these things to make any sense, and that's why I say you need to be patient with this, because it could take 2 or 3 years to realize that change in pricing. Out of platinum and palladium, I think platinum is probably the most interesting. Number 2, nickel. And this is sort of the converse relationship in a way to the PGMs. Nickel's bull market back in 2021 was driven by the Green Revolution and the obvious need for nickel because of its high energy density capabilities. The big thing that's happened over the last couple of years and that's affected the nickel price is cheap Indonesian production infiltrating all aspects of the nickel market, and you've seen it retreat below $10 per pound, which really, if you look at the whole landscape of development projects out there, is really that sort of watermark between a very select few projects being able to be developed and a whole slew. Alternatively, on the bearish side, you've got a bunch of alternative chemistries and alternatives, generally speaking, to the high energy density nickel batteries like the NMC. LFP batteries are cheaper. They are lower energy density, but for countries like China and many other countries in Asia, these are a really good source of cheap EVs for their public to use, and I think is a definite contrast versus the NMC chemistries. On the other side, you've got the hydrogen fuel cells. For those that have done some research into the larger vehicles, the heavy equipment, you'll see that battery-powered machines, if they're not connected to a wire but they're powered by batteries, they start to wane when it comes to the higher horsepower. The power-to-weight ratio becomes a problem, and this is why hydrogen fuel cells is an acceptable use in this application. So Caterpillar already has a hydrogen fuel cell line of heavy equipment. And again, I think this is a definite bearish point towards nickel's use in the future. On the other side of the Indonesian production, which I don't think is going to wane anytime soon, this is something that's going to probably be multi-decades, I do think that there's going to be a push, especially in the G7 or the Western nations, to buy cleaner nickel. And we've seen it. I'll use FPX Nickel as an example. It's a company that I've been invested for probably 6 years. Done really well on, but it's a great company from the perspective of being a clean source of nickel. And we've seen the Japanese and the Finns make big investments into FPX just because of this. And so I think you're going to see that transition, especially with companies like Sumitomo that are involved in every aspect of the nickel market, start to move their cash out of Indonesia and into these cleaner sources, such as FPX's Baptiste deposit. In terms of bifurcation in price, Andrew Forrest, or Twiggy, as he's known, came out last year in an article and he said that there should be like a bifurcation in price. Basically, LME should have a clean nickel price and a dirty nickel price. I think this has already happened, like I described, with some of these nations investing in clean nickel and paying a premium in a lot of cases on top of the LME price. But I'm not sure it's going to ever be public in the next couple of years. This is something that's probably going to develop over many years or may not even occur publicly. The last point, and I think a lot of people forget, the EVs is really just the icing on the cake when it comes to the nickel market. The bulk, the 2/3 of demand is driven by stainless steel. Out of school, I was an engineer in the steel manufacturing business. I know it very well. All of the demands from, let's say, the southern states for infrastructure from a number of different companies only increased over the decade I was in steel manufacturing, edging closer and closer to being or requiring stainless steel in their application. They're pushing from 20 to 30 lifespans on their infrastructure to 50 to 100-year lifespans. And the only way you can do that really is through stainless. So I only see that growing or at least maintaining where it is. But you want to be picky when it comes to nickel, especially below $10 per pound. So the biggest contribution I think I can make to any audience is my opinions on companies, not as much markets. I think markets are pretty impossible to predict with any consistency. So I gave 4 ideas back in March. And so the first one was centered around Orion Resources, basically consolidation of the Central Lapland Belt. The second one was the market recognizing the value in Canland Minerals. Thirdly was talking about FPX Nickel. And finally was Arion Silver. So idea 1. The share price, when I talked about it, was around 47.5 cents per share. It hit a high of 75 cents, which was a return of almost 60%. And that's on the back, and the timing was very coincidental. Orion announced that B2 Gold and Rupert had come up with a deal for $100 million on 70% of Helmi. For those that don't know, B2 Gold and Orion have a joint venture on Helmi, and it's coincident with Rupert's Elor Deposit, which is a world-class deposit, and I think will be a mine in the future. They come up with that deal, and then of course the market understands, hey, next they're going to go after the 30%. The share price goes up. Then we hit a lull. Then CEO James Whitall, he announced that the negotiations had broken off and that they were going to continue on their PFS without Helmi, essentially. And what was interesting, though, is that a month later, looking at the annual meeting report for Rupert, Whitall only received 68% of the floor votes, meaning that a portion of the shareholders weren't happy with his performance. And I would speculate that this centers around the deal with Orion not getting done. And lo and behold, at the beginning of this month, he stepped down. And in walked the chief technical officer for La Mancha, which is another interesting point. But ultimately, I think that there's a deal here for Helmi. The optimization of the Ikari pit design and the optimization of the mine layout, they need Helmi. It makes too much of a difference on the positive end for them not to do this. And I think everything is sort of lined up for this to happen in the next 4 to 6 months. Canland Minerals, it's the #1 ranked company inside the junior stock premium portfolio, and it's the #1 position in my personal portfolio. On May 21st, Centerra Gold, a great senior miner, invested around $10 million for a 10% stake in Canland. The share price reacted as it's a huge thumbs up to the management team's capabilities and the business model that they're employing. The bigger point is on July 2nd. They announced the commencement of engineering and baseline studies at Frotet. More importantly, they announced the permit application for underground exploration decline. And for anybody who knows the cost of putting in a decline, this to me is the big signal that Sumitomo sees this as a future gold mine. And the fact that they're going to put this in upon getting the permit is a huge nod towards the future of Frotet. News to come, I think you're going to see them come up with a JV partner for South Uchi. South Uchi's got a banger of a golden till anomaly. I highly suggest you check that out, and you'll see why the JV deal, I think, is going to be amongst the best that they've done to date. We've got drilling at Targa's Opanaka, which we're going to talk about very soon, and then you have baseline exploration across their whole portfolio. Idea 3, and this is the only one of the 4 that didn't work out like I'd wanted to, but again, I think it's a contrarian play in a high-quality nickel deposit in Canada. FPX's share price fell last August on the back of one of the First Nations coming out and said that they don't support the development of Baptiste moving forward. And this is despite the other 3 First Nations affected by it supporting it. Well, this past August, they had an election and voted in a new chief, Edward John. And I speculate with this election, which was held a year earlier than it was supposed to, again reflects that possibly there's dissension within the First Nation in that they didn't like how it was handled and maybe want to come back to the table. We'll see. But I think that could be a huge point in FPX's favor if they were able to come up with a deal, if that's in the cards. The other most important point along with that, just as important, is that the Baptiste project was added to BC's Critical Mineral Office, which means that the Baptiste project is going to be put into the government's pipeline of projects that they want to see developed. They're going to walk them through that process every step of the way. And considering how hard permitting is and how much doubt there is surrounding permitting, I think this is a big deal in terms of the Baptiste project, and the market doesn't care. Idea 4, and this was the best of the 4, Arion Silver's share price almost doubled, especially on the back of the Kinross Gold and Central Porto investing $20 million for each taking a 4% stake. It's a huge nod to Argentina becoming more open for senior mining companies to make investments in it. We saw the Filo deal. We see Kinross taking a 4% stake, and it opens up the door for a future M&A deal. On the back of that $20 million deal, they announced a 20,000-meter drill program. They're going to step out on the existing deposit Oculto, and they've already done that with the Jack Zone. But more importantly, and probably more upside potential, is they're going to go after the porphyry targets, which is really exciting. And then, of course, in terms of silver, if you like silver, Arion Silver is at the very top of the companies that you can invest in as juniors, and they will lead the way with silver price rising. So two ideas for the next 12 months, and it's to the presenting companies with me, Thesis and Targa. So Thesis, it's led by CEO Ewan Webster. And I think the more important point of the management team that I want to highlight today is the non-executive chairman, Bill Little. He's B2 Gold's senior VP and COO. The reason why I think it's important to highlight him is because he's a technical guy. He's also a technical guy of arguably one of the most technically renowned senior mining companies in B2 Gold. The fact that he wants to put his name as a chairman on Thesis Gold's Lawyers Ranch project, I think is a nod to the technical viability of the project and being a future mine. By the numbers, and Thesis Gold's share price has run the last 2 days since the announcement. So I believe it closed at 95 cents on Friday. So the market cap is up, but it was around 156 million at 80 cents. They just did an updated PEA on the project. At today's metal prices, it has an after-tax NPV of 2.2 billion, an IRR of 52.8%, and I think the big highlight is the average annual production of over 200,000 ounces per year. Senior mining companies, mid-tiers, they want to make a discernible difference to their production profile if they're going to make an investment to take that risk. Many would agree that 100,000 ounces is kind of like that baseline, that watermark for the minimum that they would look at in terms of an M&A candidate. When you start counting the number of companies at 100,000 ounces, it is quite small, especially in good jurisdictions. It's even smaller when you get over 200,000 ounces. And I think this is really what makes it stand out amongst all its peers. And the fact that it's located in northern BC, I think are huge points. And again, I did a little ratio calculation. This is based on the older market cap. But the market cap to NPV was around 7%, which means that Thesis is very cheap, in my view. Catalyst for share price appreciation. I think obviously a rising gold price is going to make a big deal here. There is a silver component, so the numbers that you see are usually listed in gold equivalent. They have PFS completion by late 2025, and I think you're going to see strategic investment, if not an all-out takeout by senior mining company at some point down the road. And then this is already an almost a 5 million ounce gold equivalent resource here, but there's exploration potential at Ranch, so this could get even bigger. Targa Expiration. It's led by CEO Cameron Timstra, Chairman Jim Patterson from Discovery Group. This is a joint company between Discovery Group and Venta Capital, two of the more successful groups within the resource sector that we've seen over the last 4 or 5 years, 10 years maybe. By the numbers, around $7 million market cap at around 6.5 cents per share. They did a unit financing back in March, which I participated in at 10 cents. So if you look at the company and you're interested in it, you're getting it a lot cheaper than I did. Strategically, they've got management owns around 12%, and the other one to highlight is Canland Minerals has 7.2%, and they're actually the ones that vended the project to Targa, and that's Opanaka. As a high-level checklist, something I do before I get into the weeds with these exploration companies, I look at the high-level points: large land package, no historical drilling, like to obviously see good geology, high alteration, good structures, large deep tapping faults, and then proximity to other large known mineral systems. And then finally, does both the exploration type and location fit management's past successes or experience? And Targa checks the box on all of those. Over 85,000 hectare land position, no historical drilling. It's only 140 kilometers away from Newmont's Elor gold mine, which is a large operating gold mine. They've identified 2 large gold until anomalies, both the central and eastern trends, and it's analogous geological setting to Elor. And finally, Targa has Canland Minerals executing the till analysis, which, given their track record, I would say they're the best in the business at undercover gold exploration. And here's just an example of the Elor Deposit and Renault Deposit at the top, and what they've identified in the central and eastern trends at the bottom. And that was after phase 1 of till sampling, and then we have phase 2 here that was just announced last month. And you can see it's a 7-kilometer trend, some good gold grain values in amongst the HMC samples. 25 to 50% of the grains are pristine, meaning they're in close proximity to their source. And I believe they're just finishing up phase 3, which went even more localized or infill on the phase 2 program to really narrow down where that source is and ultimately where they're going to drill. And the central target is the priority target. And here's the eastern. Field Notes is a YouTube series I started last year. We've got 3 episodes published. It follows me on site visits to the companies I'm invested in. Episode 3, Life of a Modern Prospector, follows me to Newfoundland to visit Altius Minerals, in particular the Robux project, and really covers what I think is a really important subject, which is prospect generation and how it can lead a company from a single-digit market cap to, in Altius's case, over $1 billion market cap. It's a tremendous success story, and I think Altius is like the prime example of how that business model can move everybody towards profits and value return for shareholders. Junior Stock Review Premium, I publish it weekly, give market and portfolio commentary. I rank all the companies in the portfolio and give allocations of each of those companies, and I answer all my subscribers' questions. If you're interested in the newsletter, please grab me in the lobby, or you can email me here. Thank you very much.